All right, folks, time for today's Tech Check. And for that, we head out west to Deirdre Bosa. Hi, Deirdre.
Hey, Tyler. Hey, Kelly. Well, the IPO market remains shut, frozen shut, in fact, but signs that we could be inching toward a reopening. And the key, it may lie with one company, Instacart, a company that for the last few years has become almost synonymous with the IPO pipeline. Will they or won't they? This is a question that investors and the company itself has gone back and forth on for ages. Well, it seems that the financials are lining up. According to the Journal, revenue and profit soared some 50 and 80% respectively in the fourth quarter. It was also GAAP profitable. So as good an IPO candidate as any, right? Maybe. Financials is one piece of the puzzle. Market volatility, of course, is the other, and that is certainly less clear. Here's what CEO Fiji Simo told me a year ago.
We want to be a public company at some point. The market conditions are obviously a factor, but given that we have a very strong business and not a need to raise a lot of money, these market conditions are not affecting us and affecting our timing particularly.
Like I said, that was a year ago, and she could pretty much say the exact same thing today. Not much has changed. Instacart still may not need to raise a lot of money, but its employees, they would like to get paid, and that remains tricky when investors are still iffy on risky companies, especially in the gig economy space that were built during an era of low interest rates and growth at all cost mentality. While Instacart, one of the most valuable startups in the world, it once was, it has now slashed its internal valuation several times. Its public comps, too, take a look, DoorDash, Uber, Lyft, they do not make a compelling case to go public here, still trading well under their IPO prices. Still, though, Instacart may try its luck, and it's likely to get out ahead of other candidates that we talk about, Kelly and Tyler, like Stripe and Reddit, because it is at least releasing these financials in some form to its investors.
So did I hear you're right that if you were to compare it to some of its peer groups, it wouldn't compare particularly favorably?
It would now. This is an internal valuation known as a 409A. So usually when you do a funding round, you get a new valuation. Instacart is taking this upon themselves and marking it down because it's looking at their public comps, DoorDash, Uber, Lyft. They've seen how much they've fallen in the public market. So they say, okay, our previous high valuation in the private market, they can no longer justify that.
What does your instinct tell you? Do you think they will go public over the next 12 months or not? What's your guess?
I think they got to. They've already filed confidentially, and then they pulled that. So we know that there is a real desire. We know that every time Fiji speaks to her workforce, it's a question that constantly comes up. This is one of the oldest unicorns, Tyler. It's been private for more than 10 years. So it's got to go. They talk about it a lot. Like Stripe is another unicorn that's been private forever, but they seem to be pushing it off more so than an Instacart. So we'll see if conditions work out for them. If they don't, they could do a direct listing. They don't, like I said, need to raise capital. They just need to create a liquidity event.
All right.
We'll finally get an IPO headline.
Yeah, maybe we'll find out. All right, Deirdre, thanks so much. Good to see you, as always.